Hey friends, welcome to my channel. Today we are going to take a fascinating ride through the Indian stock market. It's a journey full of highs and lows, scams, crashes and recoveries, and every event has left behind a lesson. We will start from the days when people literally traded shares under trees and then move all the way to modern times, the COVID crash, the 2024 elections and everything in between. And here is something I want you to keep in mind as we go through this journey. No matter what happens, crashes, scams, global crisis, the market always finds a way to bounce back. So without any wait, let's start. So here's the plan for the video. We will first look at how the Indian stock market even began in the early days. Then we will jump to the Harshad Mehta scam of 1992, a story that completely shook investor confidence. After that, the 2008 global financial crisis, the 2015 correction, the COVID crash in 2020, and the Russia-Ukraine war in 2022. We will also cover the sharp fall during the 2024 Lok Sabha elections, and finally we will wrap up with what the future might look like. Sounds good? Alright, let's begin. Every journey has a starting point, right? For India's stock market, that beginning was way back in the 1850s. At that time, Indians were trading shares of British companies like the East India Company, but it was all very small and informal, nothing like today's big exchanges. Then came 1875, a group of brokers got together and said, we need something more structured. That's how the native share bazaar was born, that later grew into what we now know as the Bombay Stock Exchange. By 1905, the BSE got official recognition. That was the big moment from informal deals under trees to a proper recognized market. So you see, the foundation of India's financial markets was laid more than a century ago. Now let's fast forward to 1992, probably the most dramatic story in Indian stock market history. This is where Harshad Mehta enters the picture. People called him the Big Bull. Why? In the early 90s, he was like a stock market superstar who used to drive stock prices sky high. Ordinary people looked at him as a market genius. But here's the catch. Behind the scenes, he was exploiting loopholes in the banking system. He siphoned over 1500 crore rupees and pumped it into stocks, pushing prices way beyond their real value. And then came April 28, 1992. Journalist Sucheta Dalal exposed the scam. The Sensex crashed 12.7% in just one day and over 50% across the year. Imagine the panic. Now here is the important part. This disaster forced India to reform its financial system. SEBI was given more powers and stricter rules were introduced. Painful for investor at the time, yes, but it made the market safer for the future. Alright, the next big shock did not come from India at all. It came from across the world in 2008. Remember the US housing bubble? When it burst, big banks like Lehman Brothers collapsed, and suddenly the whole world was in panic. India wasn't safe either. On January 21st, 2008, the Sensex fell by 1408 points in a single day. Within months, it slipped down to nearly 8,000. Investor wealth was just wiped out. But here is the twist. By 2010, the Sensex was back at 21,000. That is the beauty of markets. They get shaken, yes, but they also recover. So the lesson here, global events can send shockwaves into Indian stock market, but downturns don't last forever. Now let's move to 2015, another sharp correction, though not as big as 2008. On August 24, 2015, the Sensex crashed 1624 points, about 6% in one single day. So what triggered this? Well, it was a mix of global worries. China had suddenly devalued its currency. Europe was struggling with the Greek debt crisis and Brexit fears. Oil prices were collapsing, which hurt energy companies badly. Put all that together and you get a perfect storm. Once again, we were reminded that Indian markets don't exist in isolation. They are tied to global markets. And then came 2020, a year none of us will ever forget. In February, the Sensex was happily sitting at 41,000, but then COVID hit, lockdown was announced, and on March 23rd, the market crashed to 26,000. In a single day, it fell nearly 4,000 points. Think about it. Businesses shut, uncertainty everywhere, and investors didn't know what the future looked like. Panic took over. But here is the unbelievable part. In just 8 months, the Sensex was back at 41,000, one of the fastest recoveries in stock market history. The COVID crash showed us something important. Fear can drag the market down very quickly, but once confidence returns, recovery can be just as fast. 2 years later, in 2022, another global shock hit the market, this time because of a war. When Russia invaded Ukraine in February, the Sensex dropped 2,702 points in a single day. Oil prices went up, inflation spiked, supply chains were disrupted, and for India that meant higher fuel costs and pressure on imports. But here is the interesting part. Unlike earlier crashes, this one did not drag on. The market recovered in under a month. That tells us something. Markets today digest global shocks much faster than they used to. Now let's come to June 2024, and this time the trigger wasn't global, it was politics. On 4 June 2024, election results day, early counting showed the NDA struggling to get a clear majority. And what happens when investors smell political instability? They panic. The Sensex fell by 4,390 points in one single day, the worst crash since COVID. And the message here is clear. Stock markets don't just respond to economics, they respond to politics too. Investors want stability, and the moment they don't see it, they hit that sell button. So, what does the future look like for the Indian stock market? Well, no one can predict it perfectly, but we can definitely see some themes shaping up. Geopolitical tensions like trade wars or conflicts could cause volatility. Tech disruptions, AI, automation, and innovation will create new winners, but will also leave some companies behind. The green energy shift, huge opportunities there, but also big challenges for traditional industries like oil and gas. The way I like to think of the market is this. It's like the ocean, sometimes calm, sometimes stormy. And smart investors, they don't fight the waves, they learn how to ride them. That, my friends, is the story of the Indian stock market, from trades under trees to navigating global crises and political shocks. What is the big lesson? Markets will always test your patience, but if you stay the course, they reward you in the long run. If you enjoyed this session, don't forget to hit like, share this with your friends, and of course, subscribe for more such stories. This is Aditya signing off. See you in the next one. Bye.